You have got to be flipping my flapjacks. Apple up 7.77% after hours. That earnings must have been great, right? We'll take a look in just a moment. Apple announced the biggest buyback in history, $110 billion repurchase. Nvidia stock is an absolute clown show. It's all emotion driven. It's selling off, then people are buying it back, then they're selling it off, then they're buying it back. Incredible. Etsy, we have popular stocks still dropping off a cliff. Etsy stock was down over 15 percentage points here today. That stock is down over 26% so far this year. Amazon with a nice bounce back day, up over 3% here today, right? Now all of a sudden the love's being shown to Amazon. That's interesting. Sofi stock, it might be the most frustrating stock in the stock market for a lot of individuals out there. They've been in this one for quite some time, and it can't do anything. The stock's in the sixes here today, down 28% year to date. People are giving up on it. Meanwhile, other fintechs are running huge. You got Square up 5%, Hood up 5%, Affirm up 7%, Coinbase up about 9%, right? Even PayPal's up over 9% so far this year, and that stock has had its troubles, we know, right? PayPal got upgraded by several different folks out there in the last 24 hours. There's also other news in regards to PayPal as well. MoonPay partners with PayPal to simplify crypto purchases for U.S. users. They also just got out of a big government-related look into the business. 4 core subjects to speak about in this video here today. We're going to talk about Apple's strong, great quarter and that $110 billion buyback. And if you want to do some math, we're going to do some math today, baby. This is going to be beautiful. Second subject we're going to get into here today is Nvidia stock's an absolute clown show. I want to talk to you about how to avoid treating a stock like Nvidia, a great company like that, how to avoid treating them like a clown show like Wall Street's doing right now, okay? Third thing we're going to get into in this video here today is Sofi stock. A lot of people are giving up on it, throwing in the towel in regards to Sofi. We're going to talk about what's going on with the stock price. When's it going to come to life? Is it going to come to life? Those sorts of things. And the last subject we'll speak about here today is PayPal, all the upgrades, the news in regards to PayPal. You guys ever play that game as a kid? It's called Whack-A-Mole. If you're old enough, you'll know what I'm talking about. It's an arcade game, Whack-A-Mole. Need you to do that to that like button here today, folks. Treat it like it's a Whack-A-Mole. You got to get it quick, okay? Hit that like button for me here today, folks. If you're looking to apply to join my private group, that will be the pinned comment down there. Click that, fill out an application. We'll see if we can get you in there with us. We have over 1,000 members in there, always learning from me, sharing everything I got up here through all my course curriculums. Also be around just an insane amount of folks that have 6 figures, 7 figures, 8 figures in their portfolios. I recorded the private group of video here today on having a plan and then updating that plan and how to go about doing that in regards to stock position. So always teaching things like that out there. Oh, this is just a cute photo. I saw my little 2-year-old taking a nappy, and I had to take that one, okay? All right, guys, a lot to get into in this one. Get ready to get your flapjacks flipped. Apple. Oh, baby. So, we can be distracted by this. We can be distracted by that. But at the end of the day, it all comes back to the numbers. What do the numbers look like for Apple? Product revenue plummeted for the company. In this same quarter last year, they did about $74 billion in product revenue. That's like physical things, iPhones, iPads, MacBooks, all those sorts of things, right? Headphones. And in this latest quarter, they did $66.8 billion. So their product revenue fell off a cliff. Services revenue was the bright spot. Some would call that the rent. Give me the rent. You know that guy? He would say that, right? Services revenue was up very nicely for a company, up nearly $3 billion year over year. But even with that nearly $3 billion rise in services revenue, which a lot of people question if that's going to be able to be sustainable long term with what the government's up to against Apple, right? Total net sales still fell for the company over $4 billion year over year. So basically they're doing over $1 billion less every month in sales than what they were doing last year at this time, right? Now, keep in mind, this time last year, it's not even like Apple's numbers were all that exciting. Now, cost of sales, they kept that pretty in line, especially the services category was really, really impressive. That just shows you that's just like a straight profit engine for the company. And so gross margins slightly went up for the company year over year. They did increase research and development by, we can call it about $500 million year over year. Selling general administrative was up over $200 million for the company year over year, which you don't really want to see your SG&A up when your revenue's down. That's no bueno. That's not really something you want to see. So total operating expenses did rise for the company year over year. Operating income fell for the company, which you don't see that too often in regards to Apple. Net income fell as well for Apple. The diluted EPS was up very slightly, and that's only because of share buyback, right? And so overall, I would give Apple a C minus in regards to this income statement. Is it the worst I've seen? Certainly not. But this for Apple, this is really bad, especially considering most of what Apple sells, it's not like those are interest rate sensitive products, right? You know, you can make that argument for Tesla. It's like, well, Tesla's selling, $35,000, $45,000, $60,000 vehicles, very interest rate sensitive. Apple sells, a lot of Apple's products are $1,000 or under, right? So that's what's going on there. Now, you want to dive a little deeper here? Here's where you really see big problems for Apple. You got to dive into the numbers, okay? Check this out. The Americas region is down year over year for the company. Greater China is down substantially year over year for the company. We're talking $1.5 billion down. Japan is also down substantially for the company, nearly $1 billion year over year. Then the rest of Asia Pacific is over $1 billion down there as well. They got a complete disaster in anything Asia related. Europe actually grew slightly for the company year over there, so that's one of the few bright spots for the company overall. But it's clear as day, there's big problems for Apple in Asia. They can try to say this, they can try to say that. Tim Cook can try to pitch it however he wants. But the bottom line is the numbers are what the numbers are, and the company has major issues in Asia. Major issues, okay? And they even, in their hometown, they got a problem as well. Americas, that's not good. You look at, what's the big dog product? What matters more than anything to Apple? It's iPhone, right? And then after that, it's services. And their iPhone business plummeted year over year for the company, which I told you guys was going to happen, many quarters ago, right? $51 billion plus in iPhone revenue they did in the same quarter last year. This quarter, they did under $46 billion, right? No bueno. Mac business grew for the company year over year. iPad business shrunk. The wearables, home, and accessories business also shrunk massively. I mean, that was down, what, $800, $900 million year over year? What in the world? And the services was one bright spot for the company overall. So there's problems here, right? Now, that leads us to the math part, right? This $110 billion buyback. Because you got to think, is this really a smart long-term decision for Apple, or is this just another way to kind of pump the stock price and keep it elevated right now? Apple has around $91 billion roughly in debt, okay? Not a small number. Now, Apple could easily use the profits coming in for the company and go ahead and pay down that debt, which that debt, they're having to pay obviously interest expenses. When you take out debt, it's not like they give it to you for free. You have to pay interest on that. So Apple could easily use that money, pay off the debt, get rid of the debt, so then Apple's a debt-free company, and you don't even have to think about, wow, Apple's $91 billion in debt, right? And then, I mean, you could do that, and then you would still have a bunch of money around, right? Instead, you're doing the buyback, and then the $110 billion goes bye-bye, and then your $91 billion of debt still stays around. So then you're still going to be massively in debt. Meanwhile, all that cash goes bye-bye because it's used on the buyback, right? And so this is something that you got to consider, and plus the company's going to have to lose billions of dollars in interest expense, right, on all that debt they have. And once again, they have to lose that year after year after year after year. It's not like it's just a one-off thing when you got a massive debt load like that. So it's the first way of looking at this. Next way of looking at this, think about it like this, right? $110 billion you're going to spend on a buyback. Well, right now on a one-year treasury, you can get about 5.2% roughly, right? So if you can get 5.2% on $110 billion, the math on that is about $5.7 billion of interest income Apple could generate for the business model, right, over the next year. Now, that would increase earnings per share a lot. It's not like the only way to increase EPS is just by buying back shares. No, if your net income goes up and up and up, which interest income plays into your net income, right, then guess what? Your EPS up. And so keep in mind, that also would build you much more of a fortress balance sheet, because then it's not like that $110 billion goes away. Now you have $115.7 billion on the balance sheet, right? That then if you want to continue to earn interest on, you can, or you can decide to do something with it after that point in time, right? So then you have more of a fortress balance sheet overall. here's more math for you. Apple's net income in 2023 was around $97 billion, and we'll see this year if their net income's down or up. My guess is it will probably be down year over year, their net income in 2024, but we'll just say $97 billion, right? Now, say you add, a $6 billion of interest income the company could generate, roughly, that 5.7, right? And that's about a 6% help to the bottom line, essentially, right? So if you're doing $97 billion, you got another $6 billion coming in interest income. It's about a 6% roughly help to your bottom line. Now, Apple's $110 billion market cap, and the market cap as of tomorrow should be roughly around $2.8 billion, maybe 2.75, but let's say it's $2.8 billion tomorrow, right? Say it's a really good day for Apple's stock price tomorrow and gains, holding all those sorts of things. Well, if you're doing a $110 billion buyback, that's about a 4% buyback, right? So you could help your bottom line about 6% here, or you could help things out about 4% with a buyback, right? Buybacks make sense if your stock price has been destroyed and it's like, at multi-year lows or something like that, or all-time lows like that. That's when a buyback can really help because your market cap's so far down. So 110 billion will go a long way. So, and once again, the 110 billion goes bye-bye. Versus if they had that there, they would still have the 110 billion on the balance sheet, which is absolutely beautiful, right? So this is where we lead to Tim Cook, right? You could use this money, you could spend it on future products and services, but I'll just be completely honest, being what I've seen out of Apple over the last many years, I don't think they got it anymore. I don't think it really matters how much they spend on products and services. It doesn't look like they can come out with anything game-changing. They haven't since Johnny Ive left the company, right? And so the company's just kind of in stagnation mode. It seems like without a clear leader there, without a Steve Jobs or a Johnny Ive, it just seems like now the company's just kind of like floundering and trying to keep things going like what they got going on, right? Now, meanwhile, all the other Mag 7s, right, all their competitors, the other big companies, are spending extremely aggressively on their businesses, right? They're buying chips. They're building out artificial intelligence platforms that are the future of the next 10, 15, 20, 30 years, right? You look at what Zuckerberg's doing. Obviously, you look what Jensen's done at Nvidia. You look at even what Mr. Softy's up to, Microsoft, with what they're doing in their own business, in their OpenAI investment. You look at even Google. They've been kind of a lagger, but you look at what they're doing. You look at what Tesla's doing. Elon Musk is trying to get his hands on as many AI chips as possible. And you look at all these other guys, and then you look at Apple, and it's just like, Cook's over here. He's like, oh yeah, our revenues are negative. Our revenues are going down. But, and there's all these growth opportunities out there that we could be spending on. But you know what? Let's just announce the biggest buyback ever. Like, it's insane. It's literally insane. It's just, just like, wow, it's insane, but it's also sad, right? Because you think about the great company Steve Jobs built. Would Steve Jobs ever be doing this? No. You think Steve Jobs would ever be like, you know what? Our revenues are going down, but you know what? Let's go ahead and announce the biggest buyback in history, $110 billion. That seems like a great idea. No. Like, are you freaking kidding me? Steve Jobs would never do this. It's insane. It's sad to see what's happening in such a great company, man. It really is. And people don't even realize it's happening right in front of their face right now. And it's so sad to see, right? Someday this will happen to Amazon. This will happen to Jeff Bezos' company. It's not today, but maybe after Andy Jassy leaves the company as CEO, maybe 5-10 years, it will eventually happen to an Amazon. It will eventually even happen to a Tesla someday when Elon Musk goes bye-bye and then there's some new CEO. It will happen to that great company. It will happen to Nvidia someday as well when Jensen goes bye-bye. And, slowly this is what happens. The cultures erode. You get bean counters in there. You get people that are very short-sighted, that are just focused on trying to keep the stock price up rather than making decisions that will benefit the company for the next 5, 10, 15, 20 years. By spending $110 billion on a buyback, you're not benefiting the company for the next 10, 20 years. You're basically just trying to help out the stock price in the short term, right? And the last horrible thing in regards to this, right? You can use 1000xstocks.com to compare stocks. We're nearly 400 deep on the wait list for 1000x now at this point in time, right? Here you are at a situation where Apple is not an undervalued stock. This is a very overvalued stock right now if you compare them to other companies. Meta and Google are actually growing their businesses substantially, double-digit percentages. Apple's revenues are going negative. Meanwhile, Apple's trading at a higher forward P, trailing 12-month P, PEG ratio. They got much worse gross margins than those companies. Almost everything points in the wrong direction for Apple. And yet Cook's out there saying, oh, even if our stock looks overvalued compared to these other ones, we're just gonna buy it back. We're gonna buy it back like crazy. The biggest buyback ever, right? It's insane. Absolutely insane. Apple has spent roughly $650 billion in the last 10 years or so on buybacks, right? And then they're going to spend another $110 billion. So then you're talking about $760 billion worth of buybacks. If you could get 5.2% in treasuries on that, right? Apple would be making $40 billion a year right now in interest income. $40 billion a year in interest income. That's insane. Now, keep in mind, because they spent all that, this 650 number would actually be a lot bigger because all the interest income they would have gathered throughout the years. So there's a very high probability that right now the company would be sitting on $900 billion to $1 trillion of cash. And then they'd be earning 5% plus on that, which you could say is 50 billion plus in interest income. That's hard to even fathom, right? So in my opinion, this is one of the biggest corporate blunders we've really seen. And no, I don't think many people realize how big of a corporate blunder it is. And if you're very short term in nature, right, you're gonna think all this is good, right? You know, revenues are negative, but that's fine. Buybacks, woohoo! Stock price pump, woohoo! You know, who cares about anything else? We just need that stock price up. And I understand, like, if you've got a very short term mindset and you just want the stock up in the short term, it's the best move to make, right? But if you're a long-term investor and you're looking out over the next 3, 5, 7, 10 years, I mean, this is just, it's something else. We'll put it like that. You want to know something else? I'm watching CNBC. Holy smokes. You want to talk about hilarious? I was watching that earnings release, and I'm watching them baby that quarter and talk about it and all the positives and this and that. And I'm watching the headlines. And instead of the headlines being Apple's biggest business is in complete free fall, which is the iPhone business, instead of talking about how the company's revenues are going down in every single geography other than Europe right now, and that they got massive problems in Asia, what are all the headlines saying? Apple announces biggest ever buyback, $110 billion. And I'm watching it and I'm just like, they're just sucking up to Tim Cook like it's nobody's business because he gives them interviews and he lets them have information and whatnot. And I'm just like, if this was Elon Musk and Tesla and their biggest business goes down, guess what happens? All the headlines is Tesla's falling apart, this problem, that problem. I mean, they don't even know problems. They just make up problems and rumors and, oh, we heard that there's some problems with the executive team and some disagreements here. They just make up stuff. They'll literally lie to make headlines. Lie. And then here we got facts. Apple's business is in decline, major decline, and just like, let's just gloss over that. But let's make sure those headlines are about the $110 billion buyback. It's crazy, man. It's crazy. But that's what we got going on out there, right? So, I can tell you if this was Zuckerberg, they would not be sucking up to him like this. I can tell you that much. If they can find anything negative in a Meta report, anything, that's what the headline will be. Anything negative. Oh, there's that one number way over here. Let's make sure that gets talked about. It's fascinating, right? So that's Apple. Next thing talk about here, let's talk about Nvidia. The stock is a clown show right now and how to not treat it like it's a clown show. Then we'll get to Sofi, then we'll get to PayPal, okay? So this is Nvidia stock over the past 2 months. This is 2 months of clown show sentiment going on with the stock, right? One day it's all in, one day it's all out, one day it's all in, one day it's all out, one day it's all in, one day it's all out. I mean, it's insane. It's pure insanity, right? And meanwhile, is there anything going on with the business? No. It has nothing to do with the business model, has nothing to do with the fundamentals of the company or the revenues or the net incomes or any of that, to be quite frank. It's just a whole bunch of clownery going on with that stock. And I mean, you'll see it go all the way to $1,000, then all the way down to the 700s and then to the 800s. And it's just being treated like some no-name crap company. It's a clown show, right? At the end of the day, you got to look at like the fundamentals of these companies, okay? And don't get caught up in this clown show that Wall Street plays of let's get in, let's get out, let's go all in, let's go all out every other day, right? You got to look at things like forward Ps and trailing 12-month Ps and PEG ratios and gross margins. These are the sorts of things that matter for companies. Return on equity, expected revenue growth, next year's expected revenue growth, earnings per share expected growth, earnings per share growth next year, free cash flow yields. These are sorts of things that matter for companies. And this is what you as an investor have to be focused on. The conference calls, investor presentations, knowing what's actually going on in the business model and not this clown show that they're playing up here, right? You got to be able to compare these companies versus other companies that you would consider growth companies. This is like real stuff versus fake clown show stuff that Wall Street plays in regards to just the stock price and sentiment. Oh, the sentiment's negative on Nvidia this week. We better get out. Oh, the sentiment's getting positive on Nvidia this week. We better get in. You know, you got to be able to look at a company like Nvidia, compare them versus an AMD, compare them versus a Palantir. Look at the forward Ps against each other, trailing 12-month Ps, the PEG ratios, the gross margins, the net margins. You got to be able to look at all that stuff. Look at the balance sheets and figure out, like, is this a great company to invest in for the long term? Is this a bad company, right? And don't get caught up into their crap, man. Because what they're doing is just a gambling mess, okay? Focus on the fundamentals, focus on making investment decisions with these companies. If you like the fundamentals of Nvidia, great, you can buy the stock. If you don't like the fundamentals of Nvidia, great, you don't have to buy the stock. Like, it's as simple as that. But don't get caught up into that whole just clown show, okay? Next up here, let's talk about SoFi. What's going on here? My perspective on this, when the stock will beast, PayPal, we'll get into after that, okay? So the reason I thought it was important to speak about SoFi here today is because I saw this on X last night. And it said, I sincerely apologize to anyone I convinced to get in a SoFi stock starting 4 years ago. I've been beating the drum ever since then, saying this quarter will be different for the stock price. I'd be lying if I said this hasn't been a burden on me. Still long, but down. It says this individual, right? And I understand that sentiment. This person responded with, I always find the strongest supporters, when the strongest supporters throw in the towel, that is when you want to start building out your positions. Wall Street will reward the stock eventually, just not on our timeline on theirs. That is true. That is true as well, right? But I understand the sentiment. People that, you know, if you get in a stock at the wrong time, even if it's a great company, even if the company's growing and doing all the right things, if you pay the wrong price for a stock, you're setting yourself up for years of likely disappointment, right? And so if we go back in time, we look at SoFi, I mean, just to be honest with you guys, this stock was not a buy years ago. It just wasn't. The losses were climbing for the company. The fundamentals were not in a good place for SoFi back then, right? It was a mess of a company, and I would say it was near impossible to value this company back in those years, okay? And so you got to understand, it's not just about, oh, I like this company, I believe in their product or service. It's about, you got to look at those financials, you got to try to figure out a valuation that makes sense to be a buyer of. And if it doesn't get to that valuation, then you don't have to buy it. There's plenty of fish in the sea. SoFi is one of just, thousands of stocks in the stock market, right? Now, if you look at SoFi now, right, we can actually start to assign value to it. It actually has positive net income now, right? It also has much bigger revenues as well. So if you want to put them on a price to sales ratio and use something like 1000xstocks.com to compare them versus other big banks, you could do that in a matter of seconds. It wouldn't take you much time at all, right? But if you just want to look at like the bottom line net income, we can actually assign value. So company, let's say this past quarter earned around $88 million roughly net income. So let's just call it 90 million, right? So now you can at least start to play around with valuations and see if it makes sense to buy the stock or not. So you can say, okay, company earned around $90 million, times that out by 4 quarters. Maybe that's net income of $360 million over the next year or so. If you want to slap like a 25 PE, which is around where Apple's at right now, right? Keep in mind, SoFi's obviously growth rates are massively above somebody like an Apple, which is literally negative right now. But let's just say it's an Apple-like PE ratio, 25. So then you're at about a $9 billion market cap. So you know, okay, like a $9 billion market cap is roughly fair. If I think it's like a 25 is about right, and I think they can bring in $360 million of net income, right? Let's say you think companies should be at like a 44 P because you're looking at it and you're saying, you know, this company is very early days. They're very, very early on in the profit cycle and their net income cycle. So to say 25, that's like what you would put a value stock at. This is still a growth company, so they should command like a 40 P. Then you can say, okay, 360 times a 40 PE, then you're at like a $14.4 billion market cap, right? Now at least you can assign value to this. You couldn't assign value to it back in the day, in my opinion, because they didn't have a positive bottom line. They had a growing losses and epic losses at that. Then they were growing massively, right, back then. Plus, their revenues were very minuscule back 4 years ago, 5 years ago versus where they are today, right? So I don't think you could even accurately value it on a price to sales ratio if you want to compare them versus peers either back then. So I think nowadays you can actually treat SoFi like a real stock and actually value it, right? And so when I look at SoFi here today, market cap's around $7 billion-ish or somewhere around there, right? I don't think it's the time to really be a discouraged seller in regards to SoFi. I think 2024 is actually the first time to be a buyer of the stock. You're getting positive bottom line. You should continue to get that unless something freakish happens, right? And you're getting steady revenue growth from this company. You're getting steady member growth, profit growth. I think and you're getting a stock price that has been down for years. I think this is actually a buyable year for the company. And so, but once again, I understand the sentiment. Like if you buy a stock at the bad price, it's very discouraging. And you sit on that stock for years and years and years. But there's a big difference between SoFi 4 years ago versus SoFi today. It's a night and day difference. 4 years ago, that company had massive net losses that were getting bigger and bigger and bigger. They had revenues that were not in the best place. Now, revenues are in a great place. It's a much bigger company, 8 million plus members now at this point in time, profitable on the bottom line. Anthony Noto has proven he can get through all types of situations when you think about everything that's been thrown at SoFi. I think if you look back 4 years ago or so, Anthony Noto wasn't nearly as proven at that particular moment, right? I think now seeing everything SoFi's had to go through over this past 4 years or so, from inflation to Rona to the student loan situation, right, to massive changes in interest rates. I mean, I think it's more of a year to be a buyer than a discouraged seller. That's what I'll say about SoFi overall. And I think the setup is very, very good. When does it blast off? We'll see. But I wouldn't be surprised unless you get a confirmed recession at some point in the next 6 to 12 months. I wouldn't be surprised if the stock starts to blast off in the next 6 to 12 months. But, I mean, obviously, if a recession comes out of nowhere, unemployment goes up a ton, something like that, that's going to negatively affect all stocks, including, obviously, SoFi in that situation. If you can avoid that, then you're talking. Next thing up here, let's talk PayPal. Upgrades and news in regards to this one, okay? So, first off, MoonPay partners with PayPal to simplify crypto purchases for U.S. users. Popular cryptocurrency buying app, MoonPay, has joined forces with financial services giant PayPal to provide United States users with a seamless way to buy cryptocurrencies using their PayPal accounts. This partnership streamlines the crypto buying process for millions of Americans, offering them the flexibility to utilize wallet transfers, bank transfers, and debit card transactions directly within MoonPay app, according to CoinDesk. The integration marks a strategic expansion for PayPal as well, which currently offers a limited selection of major cryptocurrencies. With the MoonPay infrastructure, PayPal users will now have access to a broader spectrum of popular tokens. Ivan Soto-Wright, the co-founder and CEO of MoonPay, described the partnership as symbiotic, noting that it enhances the flexibility of users of his platform and extends PayPal's cryptocurrency offerings, right? And this just seems like a very Alex Chriss move. It's just very clear. Alex Chriss is just all about expansion, partnering, doing whatever it takes to make consumers' life as easy as possible. That was the main thing I took away from the conference call, is Alex Chriss is 100% focused on making users' lives as easy as possible. And the old PayPal of what seemed like it made users' lives more difficult, he's just taking all that away. And he's even was talking about, bringing down fees on things like cross-border transfers and things like that. And he's just willing to make a lot of moves that just previous PayPal folks were not willing to make, which is already starting to have a positive effect on active accounts. On a sequential basis, PayPal actually grew for the first time in a long time on a sequential basis. They grew active accounts by 2 million. 2 million new active accounts, which we haven't seen that in a long time in regards to PayPal. So it's clear to me that Alex Chriss is just focused on we're going to do everything that our consumers possibly want and make our ecosystems as sticky as possible. Next up here, this matters significantly. PayPal clears CFPB inquiry on Venmo. Expects no action from the CFPB after it closed its inquiry into Venmo. So that's a U.S. government agency. If I recall, that agency was founded in around like 2011. I think it was after the great financial crisis and whatnot, right? Consumer Financial Protection Bureau. And so they must have been looking into Venmo for something and not found anything. And so overall, that's good news, because that's one of those situations. If there was something negative found in regards to Venmo, it's a bunch of lawyer fees, obviously, for PayPal. Could be potentially fines if they had found something negative there. And since it looks like it's a closed matter, that's very, very, very good news for PayPal overall in regards to that. Next up here, people are moving price targets all around in regards to PayPal here. Several financial institutions have recently adjusted their price targets on PayPal holdings. Mizuho increased their price target to $68 from $60. So these are kind of bearish folks that are getting less bearish. Evercore ISI adjusted their price target to $65 from $60. Another one that's getting less bearish. Baird raised their price target to $77 from $70. So these are a little more on the bullish side. Goldman Sachs adjusted their price target to $76 from $74. So they went more bullish. TD Cowen increased the price target from 68 to 68 from 58. So they were pretty dang bearish at 58. Jefferies adjusted their price target to $70 from $65. BMO Capital adjusted their price target to $65 from $64. Come on, BMO Capital, $1, seriously? Why even adjust it? Stevens raised their price target to $75 from $70. Marquee adjusted their price target to $85 from $75, so they're much more on the bullish side for PayPal overall. Moniz Cresp Hart raised their price target to $88 from $80, so they're on the very, very bullish side, right? JMP Securities increased their price target to $82 a share from $70. RBC Capital raised their price target to $84 from $74. TD Cowen raised their price target to $68 from $58. So, what's the moral of the story from all those price target changes, right? Well, I think there's two morals of the story. First one is up, up, up. Even the bears are moving price targets up left and right. The bulls are moving their price targets up as well, which is good momentum. As Wall Street momentum, we're starting to get in a momentum cycle in regards to PayPal, where you're going to start seeing more and more upgrades as the quarter goes along. As long as PayPal, keeps beating those numbers and keeps, guiding good. You're going to see more and more upgrades, more and more price targets, and you just get into a real nice cycle of like upgrades, price targets moving up, upgrades, price targets moving up, and it actually kind of becomes a self-fulfilling prophecy where the stock just keeps pushing up because more and more people come out and start upgrading it and bringing up their price targets, and it just creates this like positive, very, very positive loop for stock overall. And I think we're seeing the very infant stage of that. I mean, that's incredible. The amount, it just took you through almost every major analyst firm out there, almost all of them were raising price targets and raising price targets. So that's phenomenal. The second thing I think is really good in regards to this matter is, my baby walked in there for a moment, okay? The second thing that's really good in regards to this is, you look at a lot of these analyst folks, they're not that incredibly bullish yet on PayPal. So there's so much room for bullish momentum to the upside here, right? What's the most bullish one I read there? These folks from Monez that raised to $88, these folks are at 85. If you look at RBC Capital, they're $84, and those are more of the bullish folks, right? So when I think about it from this angle, there's a lot of room to let's just call it, get these bullish folks a lot more bullish and get these bearish folks to get off their bears for a moment here, okay? So I thought that was intriguing there. Now, I covered PayPal earnings extensively in this particular video here. It wasn't named PayPal or something like that, so you might not know that was PayPal talked about. But that video I posted here on the main channel a day ago. So if you want to get into the nitty gritty in regards to PayPal numbers, watch that video specifically because that gets in the nitty gritty. We're now positive on PayPal shares in the public account. Now about $14,000 in the plus there, over 7%. So very happy to see that. And then it is the biggest position in the Patreon portfolio, which by the way, I'll be making moves in the Patreon portfolio tomorrow. It's the biggest position in that little baby portfolio, right? And that one we're about 9% or so. So very happy with the progress that's being made in the fundamentals of PayPal. And then the stock prices starting to come together as well with the analyst community in Wall Street, okay? Alrighty, guys. Appreciate you joining me as always. If you're looking to join a lot of like-minded investors that are focused on building their portfolios each day, talking fundamentals of the market, talking about stocks, keeping you up to date with all the news going on out there, which there's a lot of it all the time, and getting access to all my best course curriculums, knowing everything I got up here in my bald head, click the pinned comment down there, fill out an application. We'll see if we can get you in there, my private group, maybe next week or something like that. We'll see if we can get you in there. Much love and have a great day.